Hello everyone, welcome to today's live session. And in the previous live session, we discussed about companies incorporation and what is the process of incorporation, what is memorandum, articles of association, and all the different rules related to incorporation of company. And for today's live session, we are here with another very interesting topic, which is audit and auditors. Now, one very interesting part about this topic is that when you study this one, you are automatically revising company's audit part, which is there in your subject audit. So, this particular topic is helping you in two ways, not only revising one subject but doing two subjects at the same time, Companies Act as well as your audit. So now let's begin with your topic of audit and auditors. So we'll discuss the entire chapter in this live session today. So this particular topic, which is asked in exams for 8 to 10 marks for sure, short questions come from this topic, and this is something which you should not miss when preparing for your exams. So that is the reason why we have come up with live session on this topic today. Starting with the live session today. Hello, good evening everyone, and let's now start with the session. Now talking about auditor. Who is an auditor? This is a question for all of you all. Who is an auditor? I'm waiting for your answers. I write down the question here. Who is an auditor? Okay, so auditor is basically a person who expresses his opinion on the financial statements of a company, of any organization, and states whether the financial statements show a true and fair view of the financial position of the company or not. So whether the financial statements they give a true and fair view or not is something which the auditor opines upon. Now, talking about who can be appointed as an auditor, what are the rules and regulations associated with the appointment of auditor, who is qualified, who is disqualified, let's now understand all of that. So starting with section 139, which basically deals with appointment of an auditor. So talking about who is eligible to be appointed as an auditor, so it can either be an individual or a firm. So an individual or a firm, a company cannot be appointed as an auditor in any situation. So an individual or a firm, they are eligible to be appointed as an auditor. Now generally when the company appoints a first auditor, the first auditor holds office till the conclusion of first AGM. And then after the first auditor, the auditor who is appointed is said to be a subsequent auditor. And this subsequent auditor, he holds office till the conclusion of 6th AGM. So basically, the subsequent auditor will be appointed for a time period of 5 years. Subsequent auditor is appointed for 5 years. So that is the basic rule with respect to who is eligible to be appointed as an auditor. Now, how will a company decide whom to appoint as an auditor? So here comes in two situations. One is where the company is required to constitute an audit committee. Second is the situation wherein no audit committee is required. Now, can someone tell me which company is required to appoint an audit committee or constitute a audit committee? Till the time I finish this provision, I want the answer in the chat box that which companies are required to appoint an audit committee. So, talking about where a company is required to constitute an audit committee, it is the audit committee who gives recommendations to the board about who can be appointed as an auditor. So basically, audit committee, they'll give a few names to the board of directors stating that these are the people who can be appointed as auditor of the company. However, in a situation no audit committee is constituted, then in that situation it is the board itself who will decide about who shall be appointed as the auditor. So if it is the audit committee, then the audit committee will give recommendations to the board. However, if no audit committee is required, it is the board who will itself appoint the auditor. Now, let's say the audit committee has given recommendations to the board, but the board of directors, they are not satisfied with the recommendations given by the audit committee. Not satisfied as in they did not like the recommendations and they want someone else to be appointed as the auditor. Then what? Then in that situation, what can the board do? The board, they can send the recommendations back to the audit committee for reconsideration. They may ask the audit committee to reconsider their recommendations, and also they will have to give a reason as to why did they not like the earlier recommendations which were given by the audit committee. So this is how the basic name suggestion and finalization of name will happen. Now, if say audit committee again recommends new names, however board does not like them as well, then the board can themselves suggest some person's name to be appointed as an auditor, and yes, that has to be approved in the general meeting by all the shareholders. However, here it is only two-step process. Board will decide and the shareholders will approve. Approval of shareholders is required. Shareholders approval is mandatory, it is required. Now, so let's quickly have a look at the provision here. So if a company is required to constitute audit committee becomes the competent authority to give recommendations. If no audit committee, then the board of directors is the recommendation authority or competent authority. Now, what is the responsibility of the audit committee or the board? Their responsibility is basically to check the person whose name is being recommended, whether he has right experience and right qualifications or not. So if you're appointing an auditor for, let's say, Reliance Industries Limited, that auditor cannot be a freshly qualified chartered accountant who does not have good work experience. He has to be someone who has good work experience and has good qualification, right? So, good amount of experience and right qualification. Not only that, his qualification and experience should match the size and needs of the company. Not only this, the authority must also check if there are any orders or ongoing cases related to any professional or other misconduct against the auditor with the ICAI. And if there's any additional information required, they'll have to get that as well. Now, when the audit committee is the competent authority, they'll recommend the name to the board, and the board will then review the recommendations of the auditor and to the shareholder in the AGM. Now, two things may happen. Board agrees with the recommendation, then board will forward the recommendation to shareholders in the AGM and the appointment will happen. Second, the board disagrees with the recommendation, and in that situation, they will send back the recommendation for reconsiderations and the reasons for disagreement. So this is what we have already discussed. Now talking about which company is required to constitute an audit committee, and this was a question I asked you some time back. Let me just check if someone has answered it. So yes, we do have answers. Listed companies, companies having paid up share capital of Greater than or equal to, okay, fine. So I do have an answer here and very good. Let's see if your answer is correct. So which company is required to constitute audit committee? So as correctly mentioned, all the listed public companies, they will have to constitute. And apart from it, public companies who have paid up share capital of 10 crore or more, or turnover of 100 crore or more, or aggregate outstanding borrowings, loans, etc. of 50 crore or more. Any of the three conditions satisfied, then that public company will have to constitute an audit committee. So yes, your answer is correct. However, it has to be public company, but otherwise the answer is correct. Now, moving ahead, whenever a person is being appointed as an auditor, we will have to obtain a written consent from that person whether he is willing to be appointed as an auditor in the company or not. So, not that you only make the decision and appoint that person, you will have to obtain his written consent as well. And not only written consent, along with the written consent, we'll also have to obtain a certificate. And what is this certificate for? This certificate is basically certifying that the individual or the firm, they are not disqualified from being appointed, and also the appointment is as per the terms of the Companies Act. Also, it is within the limits which are laid down by the Act under the authority. And apart from it, it should also state if there are any proceedings pending against the auditor, it should also state the details of those proceedings and other stuff. Then, whenever a person is appointed as an auditor, an intimation has to be sent to the registrar in form ADT1 within 15 days from the date of the meeting in which the auditor is appointed. So, the first form which we file for appointment of auditor is form ADT1. Time limit is 15 days of appointment of the auditor. Now, if you remember, there is a requirement of rotation of auditor. A person, if he is appointed as an auditor in certain companies, then he will have to retire by rotation if he has completed certain time period of being an auditor of that company. Now, which types of companies are where the rotation requirement is there? Let's understand. So, this will happen in case of all the listed companies, rotation required, and all companies excluding one-person companies and small companies, which are unlisted public companies having paid up share capital of 10 crore or more. So, unlisted public company having paid up capital of 10 crore or more. Private companies having paid up share capital of 50 crores or more. So, private companies having paid up share capital of how much? 50 crore or more. And having public borrowing from financial institutions of again 50 crore or more. So, these are the companies where what is required, where retiring of auditor by rotation is required. Now, what is the term after which retirement will be required? The term will be one term of 5 years for individual and two terms of 5 years for firms. So basically, it will be 10 years for firms and 5 years for individuals, 5 consecutive years for individual. Now, so shall not appoint or reappoint an individual as an auditor for more than one term of 5 years and a firm as an auditor for more than two term of 5 years. So that means after this person has completed 5 years, we'll have to appoint someone else in his place. And this current auditor will no longer be eligible to be appointed as an auditor for a cooling period. And this cooling period is again a period of 5 years. So whether it is a firm or an individual who has completed their term and are retiring, then they shall not be eligible to be appointed as the auditor for the next 5 years. And not only them, their partners, their relatives, they will also not be eligible to be appointed as an auditor. So that is what is stated here, that as on the date of appointment, no audit firm having common partner to the other audit firm whose tenure has expired, which means some audit term whose tenure has expired. You should not have any common partner with that audit firm in the immediately preceding financial year shall be appointed as an auditor for a period of 5 years. Which means what? Let's say, for example, Mr. A was an auditor in the company. He is a partner in two firms, ABC and Company, as well as XYZ and Company. Now, when A was the auditor of the company, he was representing ABC and Company. Now, the company wants to appoint XYZ and Company as the auditor. However, XYZ and Company is also not eligible. Why is that so? Because Mr. A here is a common partner. And since ABC and Company is not eligible for 5 years, XYZ and Company will also not be eligible to be appointed as an auditor for the next 5 years. Now, what is the power of the members? So, the members of the company may resolve to provide that in the audit firm appointed by them, the auditing partner and his team shall be rotated. That is, there shall be change in the auditing partner and his team at regular intervals. And also, they may say that the audit should be conducted by more than one auditor. If they want, they may request this particular thing. Now, cooling off period is for 5 consecutive years, and this has to be fulfilled for the rotation requirement. If a partner who is in charge of an audit firm and also certifies the financial statements retires from that firm and he joins another firm. So let's say, for example, here A is not a common partner, but rather he has left ABC and Company and he has joined XYZ and Company. So even in that situation, XYZ and Company will not be eligible to be appointed as a auditor. Now, company which has appointed joint auditors, they may follow rotation of auditors in such manner where either both of them retire together or the retirement time of both the auditors may be different. Now, where the company is required to constitute audit committee, it is again the audit committee who will give recommendation about who shall be the new auditor who has to be appointed, and board will again take its recommendations into consideration. Now talking about how the appointment of first auditor will be done. Now this is again divided into two parts. Can someone tell me how will the first auditor of a company be appointed? So it is divided into two parts, non-government company and government company. First auditor of a government company. Now, talking about a non-government company, if you talk about a non-government company, the first auditor is to appointed by the board of directors. And what is the time which they have? So, board of directors within 30 days of the incorporation of company or registration of company. So, in case of a company other than government company, it is the responsibility of board of directors to appoint the first auditor within 30 days from the date of registration of company, and that auditor he'll hold office till the conclusion of first AGM. However, if it is a government company, then who will come into picture? If it is a government company, then the Comptroller and Auditor General of India will come into picture, and he shall appoint the auditor within 60 days from the date of registration or incorporation of the company. So this is the first authority. Now what if the board fails to appoint, or what if the CAG fails to appoint? So if the CAG fails to appoint, then the power goes in the hands of the board. If CAG fails, then it is the board who will appoint the auditor, and they have 30 days to appoint the auditor. So if CAG of India fails, board is to appoint the auditor within the next 30 days. And if the board also fails, then they will have to inform the members of the company who will have to make the appointment within 60 days at the EGM. So if board also fails, then who will come into picture? Then comes the members of the company. Members in EGM And they have how many days? They have 60 days. Alright. And here if the board fails, then it goes in the hands of members again. And they'll have to do the appointment within 60 days. Now talking about appointment of subsequent auditor. So in case of government company, the CAG will have to appoint a subsequent auditor within 180 days from the end of the financial year. Or rather from the beginning of the financial year, not the end, from the beginning of the financial year. Now there's something called as casual vacancy in the office of auditor. Now how is a casual vacancy caused? Casual vacancy may either happen due to the death of the auditor or retirement of the auditor, or it may happen due to resignation of the auditor, death, retirement, resignation, or any other incapacity of the auditor. There will be a vacancy in the office of the auditor. Now, when there is casual vacancy in the office of the auditor, then the other auditor will have to be appointed within certain time. So, the board who will fill it, it is the board who will fill the casual vacancy in the office of the auditor within 30 days. So within 30 days, the board will have to fill the casual vacancy. And any auditor appointed in a casual vacancy shall hold office till the conclusion of the next AGM. So he is not going to hold office for 5 years. Rather, he will hold office till the conclusion of the next AGM only. And when it is caused by resignation, then the appointment shall also be approved by the company at the general meeting within 3 months of the recommendation of the board. And if it is a government company, then the CAG will have to fill the casual vacancy within 30 days. And if the CAG fails to fill, then the board will have to fill it within the next 30 days. Now, talking about whether a retiring auditor can be reappointed. So, yes, he can be if he is not disqualified from being reappointed. So, if he is qualified, he can definitely be reappointed. And he is not given a notice in writing of his unwillingness. That is, the auditor himself has not stated that he does not want to become an auditor in the company. So, in that situation, then again, you cannot appoint him as the auditor. And a special resolution has not been passed at that meeting that other auditor that he shall not be reappointed. So in these situations, what can be done? The retiring auditor can be reappointed. And what if no other auditor is reappointed or appointed? Then the existing auditor shall continue to be the auditor of the company. Now, talking about section 140, which is about removal or resignation of auditor and giving of special notice. Now, if you want to remove an auditor, say you appointed a person, Mr. Y, as the auditor in your company. However, Mr. Y is not doing his work in a proper manner. You are not satisfied with the quality of work which Mr. Y is doing. Then, in that situation, the company has got a power to remove the auditor before the expiry of his term. However, if you want to remove the auditor before the expiry of his term, what is required is a special resolution. You will have to pass a special resolution, and not only special resolution, approval from the central government will also be required. So, the auditor may be removed from his office before the expiry of his term only and only by a special resolution, and after obtaining previous approval by the central government by making an application in form ADT 2 within 30 days of passing the board resolution. So the first thing here is the board of directors, they have decided to remove the auditor, so a board resolution will be passed. Now, after passing the board resolution within 30 days, what has to be done? An application has to be made to the central government, obtaining their approval for the removal of auditor before expiry of his term. Application has to be filed with central government, and post this, a special resolution has to be passed on the basis of the application of the approval of the central government. So that is what has been stated, and the application with the CG has to be filed in Form ADT2. The company shall hold the general meeting for passing the special resolution within how many days? 60 days of receipt of approval. So here again, within 60 days, meeting shall be held and this special resolution shall be passed. However, whenever you are removing any person as an auditor, what will have to be done? You will have to give the auditor an opportunity of being heard. Listen to his side before you remove him. So here are the steps: special notice for removal, board resolution, then application to CG. After receiving approval, special notice for the meeting, opportunity of being heard, special resolution, and then the auditor will be removed. So these are all the steps in short. Now what if the auditor himself resigns? So if the auditor